I am joined by Daniel Newman, CEO of Futurum Group. Daniel, great to have you here.
It's great to be with you.
So we are breaking down big tech earnings. Let's start with Tesla because that's the one that's moving the most following a miss on both the top and bottom line. Automotive sales down, 16%. You see those numbers, you hear what's said on the conference call, and you walk away thinking what?
Well, first of all, everyone knew that the numbers weren't going to be great. Elon Musk is back, wartime, full-time founder mode. And I think that's really what the street wanted to hear from him was, he got into this kind of political era of his career. He was in Washington, not paying enough attention. Sales are down, competition from companies like BYD in China, eroding market share. You've got a lot of focus on other tangential businesses. People still worry about the X business, the XAI business, SpaceX. Can he juggle everything? Because Tesla still is kind of the prized crown jewel of the Musk, era. And so I think if you're looking at the numbers yesterday, if you're an investor in Tesla, you're kind of looking at the whole thing and saying, is the thesis still intact? Because it hasn't been about the automotive numbers for a very long time. It's been about autonomy. It's been about robotics. It's been about energy. And then, of course, it's looking at the kind of entire estate that is the Musk, the Musk enterprise. And that includes space. That includes boring. That includes energy. That includes the all-in app that's going to do payments and rails and crypto and everything that he's trying to do, and kind of looking at how this might eventually come together to become something bigger. You heard the tease, Caroline, recently about, should XAI, and Tesla and SpaceX, and is there going to be money moving between these companies? Is there going to be fundraising? So all these things are happening, and I think Tesla investors are, they're glad to see him back in the chair. At the same time, though, you're asking the question of, is this robo-taxi thing going to take off? Is it going to drive revenue? Is the China disruption and the high-value, low-priced automobiles they're making going to help? And then, of course, there's things like the tax, the big, beautiful bill, some of the impacts to the business. So overall, the thesis is still intact, but it hasn't performed well for some time, but it keeps that $1 trillion market cap.
And you say that investors heard what they wanted to hear, that Elon Musk is back to sleeping at the office. But at the same time, we also heard Elon Musk on the call say Tesla could probably have a few rough quarters ahead as a result of the expiration of some of those EV tax credits, saying, I'm not saying that we will, but we could. What do investors do with that guidance? Because I understand the AI thesis, but it still has a core EV business as well. How big of a red flag is that?
I mean, if you're an investor that likes to make decisions based on fundamentals, I see no way right now you would stay in Tesla. You look at what Alphabet did this week and what it's accomplished, and while it did have a nice run, how undervalued it is. And then you look at Tesla and you look at the multiple it trades at, and you look at all the risk in that business. But the alpha there, the potential of that company taking off on a single piece of news, on a single deal, on, when Musk says, I'm sleeping in the office, they get 6% bumps. So it just doesn't trade normally. But people believe, and this is the thing that Musk has been able to accomplish, is that people believe in this bigger vision. They believe that Optimus is going to be a multi-trillion-dollar physical AI opportunity. They believe that all the data that's come off of all the rides is going to create an autonomy business for robo-taxis that will blow away Waymo and any other company, Uber, that is trying to get into that space. They're playing the long game. But if you're, like I said, if you're a fundamentals investor, it's not investable. And when we look at our power rankings on the Mag 7, it sits on the bottom because it just doesn't make any sense. But if you're a believer and you see how markets can be irrational, see how Palantir trades at a ridiculous multiple. It's bigger than so many companies that it does a fraction of the sales of. But when markets believe in something, and by the way, the power of retail, when retail believes in something, it can certainly propel the share prices well beyond what fundamentals would ever support.
To that point, though, it does trade at this premium multiple. So does the thesis, the bull thesis that you're talking about, support that valuation?
No. I mean, the actual valuation isn't supported by anything fundamentally. It is completely exuberant and irrational, but it's been this way for a very long time. But if you're going to bet on which company is going to win autonomy, and you believe that is a multi-trillion-dollar opportunity 5 and 10 years into the future, now may be the time to buy. Because the thing that people are afraid of, it's the FOMO, it's the chase. Like, what if I sell my position out now at 300 or 306, and in a month they see the autonomy, the robotaxi business taking off. All of a sudden, China numbers come in stronger than expected, and this thing runs to 500. You're going to have so much regret. So I think a lot of people like that expanded multiple. They like the fact that it can move without fundamentals, and they do believe at some point there will be this inflection that's going to send this stock parabolic to all-time highs. But there's so many other names that just make more sense, and that's why we sort of, throw caution at this one.
So what do you do? Do you buy the dip here, or do you wait it out?
Yeah, Tesla's not going to be something I'd be adding into my portfolio at this point. Like I said, I like the company. I believe physical AI is something that Elon Musk will do well. But I still think the physical AI winner is Nvidia. I think Nvidia gets a piece of all of it. I think that it's become such a reasonably priced stock based on the expectation of the market share it will continue to take, the profits and cash flow that it continues to generate. So it's like if you're playing this way and you want something with tons of upside, but you also want something that is supported by fundamentals. Every other company in the Mag 7 needs Nvidia, including Tesla. And by the way, every technology company in the world needs Nvidia right now in some way, shape, or form. So I absolutely believe there. Tesla is an ancillary beneficiary to physical AI, but the revenue just doesn't support it. So I'd play the Nvidia play and let Tesla benefit from using Nvidia technology. And at some point, like I said, watch for Tesla to start showing signs that it can grow into the narrative. But I still want to see that car go across the country, the one I heard about like 8 years ago. So there's just some things that, like I said, Musk just exists, functions, and succeeds on his own timeline. The investors that buy, they understand that, know that, but there's significant risk associated with that.
Okay, let's bring Alphabet into the conversation, because that was a bit more straightforward of a report, a beat on both the top and bottom line. Would you buy shares of Alphabet, which had been underperforming the broader market heading into the report, based on those results?
Most undervalued stock in the Mag 7. I am an absolute believer. First of all, the full AI stack. Google is not appreciated. Alphabet is not fully appreciated for what it's been able to accomplish in AI. We know it acquired Brain and DeepMind and has had all this research lab. We talk so much about Meta and superintelligence and what he's doing, Mark Zuckerberg's doing. They've been doing this for a long time. They've had this lab for multiple decades. They've been doing AI for multiple decades. They've been building infrastructure and chips. So you heard my Nvidia thesis. Well, the only company on the planet that's actually able to build a high-performing large language model, deploy it to market, and drive revenue from it with their own infrastructure has been Alphabet, Google. TPU, partnered with Broadcom, built this custom chip. Have been doing this now for more than 7 generations. Gemini Advanced, one of the highest and most performant models in the marketplace right now. And of course, the AI story is also underappreciated. People are like, oh, they're going to lose to OpenAI. Well, OpenAI is constrained right now. They're constrained by lack of capital. They're constrained by Satya Nadella sort of controlling how much he's letting them do, from becoming a public benefactor or a going public at all, to how much money they're able to raise by not allowing them to pursue some of their endeavors that are required from Masason and others that want to capitalize the company. On the other hand, Google, has the AI layered in to everything. So you do a search now, right? And for all the Luddites and the laggards that didn't spend $200 a month on OpenAI and that literally just go to Google still and do search, they are able to benefit from Google AI right in the search. You're seeing AI populate in the search. You're seeing AI populate into Workspace now. So if you're a Google Mail, if you're using Google Documents, and also, of course, in YouTube, they're using AI to optimize. And what a data foundation! What an incredible data lineage that they have with their search engines, with YouTube. So I just think the thesis is wrong. Where there is risk is regulatory, and the other area that there is risk is search revenue, meaning that now that they've successfully layered AI in, less people are going to need to click on searches because the good information shows up in the AI overview. Search is how they make money, but I think every business is going to have to rethink their revenue model, whether it's a company like Alphabet or Google, or it's going to be enterprise AI companies like Salesforce and ServiceNow, which had great numbers, but they're going to have to change how they charge because people aren't going to click as much when AI is delivering such good outputs.
Yeah, it's interesting because I think going into this report, there was some concern about, is search under pressure? We didn't necessarily see that in the numbers. It actually came in better than expected on the search front. But you don't look at ChatGPT as a risk. I know myself personally, I'm using it more, and I always was a, just go to Google kind of person. And Google was the verb, but we're not saying we're going to look it up on Gemini necessarily.
No,
It's ChatGPT has really, is the verb, if you will.
Yeah, I think credit to Sam Altman, OpenAI, for being early and being first. I think there's a lot of risk there, as I mentioned, with Microsoft. There's also a lot of risk with them losing many of their top researchers right now. They've been poached substantially, not by Google though, mostly by Meta. I think there's risk to the business model, period. So that was what I was trying to say before. I think there's real risk that search itself needs to be reconsidered. However, I don't necessarily know that we've seen as much of a transition. You just said it yourself. The search data, there was one quarter where search data showed somewhat of a stagnation or even maybe a slightly quarter over quarter downtick. And then ever since then, search is still going up. So I think we need to see more real market signs that search is deteriorating, because it's a little bit like the Apple story. I'm quite pessimistic about Apple because of their lack of success in AI. Having said that, 2.2 billion plus devices, that people love their Apple device, and nobody's saying, oh, because Siri's not great, I'm going to get rid of my iPhone. No, they're not saying that. They're saying, we'll continue with this. We love the device. We love its functionality. We love our Apple ecosystem. We love our blue bubbles. We're going to stay with it. And if Apple can get intelligence correct, probably in the next 2 years, they probably won't see much market erosion. I think while people like us that are in tech, that are on top of media, that are constantly on our devices, have certainly played with and adopt Perplexity. We've adopted OpenAI tools. Maybe we're playing with Anthropic. But I think deep down, the vast majority of people out there, call your uncles, your aunts, your brothers, sisters, moms, friends, still use Google pretty pervasively. Even if it's just in the Apple, when they're throwing it in the Safari browser and just search a term, they don't realize it's that Google relationship going back to Google. I think they have a stickiness. It'll take time. But OpenAI is a real threat to every business, by the way.
Okay, well, speaking of Apple, Apple's next on tap as we think about next week's earnings. We have Meta, Apple, Microsoft, Amazon. What can we expect to get us prepared for those?
Well, Apple, I think we're going to see it's going to be pretty dry. I'm hoping we're not just hearing about buybacks. They've had some big changes in management, COO stepping down. We've had some of their top AI talent poached. People are going to be looking at the handset number. They're going to be looking at impact from China. We expect it to be pretty flattish. So we're not super excited about Apple. They're number 6 on my power rankings for the Mag 7 right now. Only Tesla sits below, because at least Apple still has the cash machine. It's really struggling with innovation. Microsoft has been a juggernaut, been very consistent with their Azure business. I am a little worried about its dependence on OpenAI because how fractured that relationship clearly is, but it's all about the Azure number with Microsoft. Is Azure growing? And that Google number yesterday is going to be the comparison point. Are they growing as fast as Google or slower than Google? Oracle's been a bit of the dark horse here because they've had this massive growth number, and of course that's partially powered by OpenAI. So there's all these things happening, and then Amazon, AWS, that's where they make all their money. Now, their ads business has been impressive. It'll be another one to sort of compare against the YouTube and the Google Click ad business yesterday. But we think that Amazon's thesis is intact. We think they've made good progress in AI. We expect that their growth will be the slower end, but they are still dealing with law of large numbers, Caroline. They are the largest cloud by a long margin. And so their growth has gone into the mid to high teens. So Amazon, solid. Apple, we continue to be worried about, but we know they know how to operate and do business. That's Tim Cook's special. So I don't think the earnings will be bad. I just think people continue to be a little bearish on the narrative. And then Microsoft, I think, will do the business. They've done it consistently. I don't see any reason to be too concerned here.
Okay, and you have your own ranking, as you've said, with Nvidia on top and Tesla and Apple on the bottom. For so long, the Mag 7 traded as one, and we certainly haven't seen that this year. Do you think it's time for the Mag 7 to be broken up?
We may need a new name for it, and we certainly see them some divergence in the companies and just what they do, how they function, and why they're going to be important. The AI era has sort of created a new ranking and a new order. Nvidia just stands in a class of its own right now. The only other company I think that has a moat as big as Nvidia is TSMC. But TSMC is a little more boring. People get a little confused about the foundry business, but basically no chips are made right now of any consequence without TSMC. So that's a really interesting one. But yeah, right below it, we love Meta. Meta is one of the few companies that actually is really putting AI to work. So their ads business and how they use AI to make money, their investments in superintelligence. Zuck is making these $100 million plus single employee bets. By the way, Zuck, I'm in. Call me up on single employees to basically drive the company to superintelligence. But I think there's trillions of dollars of market cap at stake. So he's basically looking at this like a professional sports franchise. Bring in the best talent, win the World Series. Are we the Yankees? Are we Manchester United? Whatever sport analogy you like. We'll buy the best players. We'll try to win that way. That's going to be the bet. Can he make that work? And then right behind it, we see that kind of Microsoft and Google sitting there right in the middle with Amazon. So the big hyperscalers, they're playing on both sides. They have consumer things, e-commerce, they have search, they have devices and productivity tools that everybody uses every day. Solid, but like I said, the two ends are diverging very quickly within the next sector.
Okay, so just quickly, if it's not going to be called magnificent, what should we call it?
Fantastic. I don't know. I don't know. Creative, I am not. But
right.
Thank you so much for the opportunity to chat about all this.
Daniel Newman, thank you. That is Daniel Newman, CEO of Futurum Group.